Yeah, good evening, everyone. You are welcome to Get Finance and Investment Tips Community Webinar Series. And today we'll be discussing on understanding the concepts of stock investing for beginners. This is for community members. And before we start, I always like to remind everyone of our vision in this community. And our vision simply is to build a financially empowered community where individuals develop a strong investment mindset, achieve financial freedom, and create everlasting wealth for future generations. That is our belief, and that is what is pushing us and is driving us to continue to support everyone in the community. So now to the main reason why we are here today. Firstly, because I said it's for beginners, it's for those that are just starting this journey, or you want to learn more and to add to your knowledge. So I will start by what is a stock. Stock, because we say stock investing. When you buy a stock, it's like you have ownership in a company. So you set up a shop, like you register and you want people to be part of that company. You want someone to be part of that company. It helps to you, means that you would have access to their assets and earnings. And before you want to be part of a company, it means there must be something that is of interest to you before you want to be part of that company. And this is very important because, I discuss with investors on a daily basis. You must have a good reason for buying a stock. So if I'm asking you, oh, Ayo, I have this particular stock in my portfolio, the first thing I will ask is, why did you buy it? There must be a reason. So you would see that the stock recommendation that we post every time, there are justifications for most of them. There's always a reason for that. So you must always have that reason. It is that reason that will keep you when the market is down. So if I believe, for instance, I believe in MTN, and I think they will be making money. So if MTN is going down today, the first thing I will ask myself is that has the business of MTN changed? If it has not, are they still making more money? Yes, as we are on this call, they are making money. So if that has not changed, it means that I will still be happy to hold the stock. I will not panic. I would have more confidence to acquire more. If I buy Tesla today, for instance, and Tesla is going down, I should not worry because I must have a reason. Is it because of the robo drive technology? I met someone that used it when traveled. Is that why you are buying it? Because they will earn more revenue. Nvidia, for instance, you are buying because a lot of AI is the next phase and a lot of technology requires to plug in with them. So you must have that reason for buying it. And sometimes we hear some of these terminologies: stock, equity, shares, in the context of what we are trying to do, because we are here to invest, to make money. We'll look at the different strategies as we progress. So there's no need to complicate it. It's when you are looking into details that you may start to say they have a bit of differences. But it's, as what we'll be saying here, it's the same thing that about stocks, about equity, about shares. So once you hear any of those words that use, it means the same thing. So let's just know that for the purpose of investing, buying, selling, holding stock, buying equity, buying shares, when you see when I post and I use it, it means the same thing. There's no difference. So when you buy stock, see yourself more as an investor than a shareholder. Because why I'm saying see yourself as an investor is because you are there to make money, to earn a return. You are not there because you think you like the bank. You know, those days you see parents who just like First Bank. See, I deal with investors. Say First Bank is not doing well. Can you sell your shares? Say, no, I just like First Bank. No, that shouldn't be the mentality. You should be there because you want to earn a return. Don't just like a company. You should like them because you would benefit something from them, which is the return as an investor. So that concept or that mindset, we need to build that as an investor. So now, as we go deeper into it, why do you now invest in stocks? The first reason why people invest in stock is capital appreciation. Some people call it capital gain, which means that if I buy Zenith Bank at 20 naira, for instance, and it moves to 30 naira, it means I have gained 10 naira. I hope you can see the screen. So this is not just a lecture. It's not just talking. I like to write so that we understand it and to break it down. You buy a stock today. You buy it at 10 naira. It grows to 20 naira. It means you have gained, because if you have 5 units at 10 naira and the 5 units moves to 20 naira, it means that from 50 naira is now, your total value is now 100 naira, right? You know, some people will ask, how do I know whether I'm gaining? You will know whether you are gaining based on the total costs that you have invested in the stock. So you have invested 100 naira. And when you check your portfolio, you can see that it is 150 naira. It means that you have gained 50 naira. If it's 1 million you have put there and you are seeing 1.1 million, it means you have gained. And sometimes it's good to put this. Sometimes you can see 90 naira. And that is why this stock investing, it is not for everyone. If you don't understand it, we will do a practical, we'll look at shares last 5 years. I'll try to project that. I'm hopeful that we'll be able to get there. You would see how stocks move up and down, but overall, good stocks will definitely move up. And that is the way I want us to see this. Once it's down at 90, you shouldn't worry because you are holding a good stock. You know, like I started, if you don't have a good reason for buying a stock, when it's down, you would worry rather than add more if you have money. So it is not mandatory. If you don't have money, then you wait it out. But what we are trying to do in this community is using the best approach. You need to be buying periodically. Don't just say you got 5 million and you just put it in stock and that is all. Sometimes you may be lucky that maybe you come in when market was low and it goes up. Fine. But it can also be the other way around. What has worked over the years, when you look at, if you do studies around it, is investing periodically. We chose monthly because most people in Nigeria earn salary monthly. And for some that are also into businesses, sometimes you pay yourself monthly. But if you know that periodic investment works for you, that is also very good. But don't have the mindset that I'll just put this 100K and that is all. If it's just one-off, then you are not building wealth. You are just trying to see whether that 100K can be 200K. You may be disappointed at times. So we will see that method of dollar cost averaging as we progress. So that capital appreciation, you need to have that mindset, the capital appreciation. Then dividend also comes in, which is also very important. Dividend. Seeing like there's a chart that I've not responded to. I've not received dividend since I bought the shares. The first thing that you need to know is that on dividend, it is not all companies that declare dividend. But what we have done most times is, because we know a lot of people are new to investment, we've looked at companies that pay dividend periodically. Especially you see what we call the long-term strong stock, fundamental stocks. The growth stock for most of them also pay dividend. The only one that don't pay dividend are the highly speculative stocks that we recommend. Yeah, so that dividend, most time we have what we call interim dividend and final dividend. Interim is when company at their half year, whether it's half year is their first 6 months, 1 year is 12 months. Their first 6 months, they want to pay dividend. Like the banks now, they have submitted their report, the top banks, UBA, Zenith, Access, and GT Bank. They have submitted their results to CBN, awaiting approval of the results and the interim dividend. They have been consistent paying interim dividend. The interim dividend is always smaller. But this year, they have not paid. Most of the companies too did not declare interim dividend this year. So what we are hot after now is the final dividend, which comes out after their audited reports. So before you confirm whether you are supposed to receive dividend or not, note the cut-off qualification dates. And if you have qualified, we will discuss on how maybe you need to reach out to the registrar. It's very complicated in Nigeria, but it's still, because we are trying to build well, that focus, sometimes things don't just come very easy. So you still need to try your best to see how you can retrieve your dividend. So we'll discuss that. So those two things, those primary function, whether you are buying US stock, you are buying Nigerian stock, capital appreciation or capital gain, and dividends, those are like the two principal things that you need to note. And for the US stocks, why it gets more interesting is that you are investing in dollars. So apart from the capital appreciation, you buy NVIDIA at 120. It moves to 160. You have gained $40. So even if it's 0.1% of NVIDIA that you have, and you bought $10 worth of NVIDIA, a 40% increase means that it will be $14. That is just the way to. So if you want to now take some profit, if you're a short-term investor, if you're a long-term investor, you shouldn't worry, because you are building wealth over time. You can decide that I have $4 out of my profit. Can I sell $2 worth? But we need to note, depending on the platform you are using, there are also transaction costs. So that buying and selling, you need to be sure of the transaction cost, because you are selling very minute unit. If there's a fixed cost that is charged, especially in Naira, you see that their SMS charges is 4.2. So if you are buying shares and you are buying it 50, if you are buying it 50, let's say 100 Naira, you say you want to just buy 3 units, they will still deduct 4 Naira. If you are buying 100,000 Naira worth, you'll still deduct 4.2 Naira. That's SMS. That's why you get the alert, which is for you to be able to know when someone is playing on your portfolio, you'll be able to see it. And you are buying 1 million. If you buy it at once, is that 4 Naira they will charge you. So you will see that the average cost over time may vary. Someone may buy MTN now and say, okay, I bought at 410, and my total cost at the end of the day is 420. Some can say it's 415, depending on the number of units that you are buying because of the fixed cost. So I'm chipping some of these things in based on questions that have been asked across different groups. We're a total of about 3,000 members across 5 groups. But different questions that come up also inform some of the discussion and engagements that I have. So please, our questions, there's also the question Q&A chat box that you can also begin to drop your questions so you don't also forget. We'll also give opportunity to ask questions even as we progress. I hope we are following. We can maybe use thumbs up. Let me be sure that's not speaking to myself. Hello. Okay. Thank you.
Hello?
Madam Grace. Thank you.
We are with you,
Thank you.
sir.
Yeah, thank you
We are
very
with
much.
you, please. We
Okay.
are here.
So, yeah, thank you very much. So now we are going further to see how the stock market works. You know, we say stock market. Market is market, but we are here to do stock market. There's fixed income market. There's the regular market. So I try to look at analogy between the regular market that we are used to and the stock market. So you go to the regular market as an investor. You say you want to buy in the real market. You say you buy tomatoes to sell later at a higher price. Maybe you are a commodity trader. You buy it. You cannot buy to say you want to sell at a loss. So when you are trying to buy, your first intention is that you want to sell at a profit. So that's why in stock market, you are buying shares, part of a company, hoping that the share price will rise. Secondly, you sell tomatoes to make a profit. Same thing in the stock market. To book your profits, you need to sell. You can't keep holding your shares by just looking at the numbers. You must sell for you to realize the money. You know, there's something we call paper profit and actual profit. When market was really going up, you would also see, for those that have joined during that period, I wasn't too overly excited. I was also trying to warn people, come in gradually, because once it's getting to a height that even you is becoming unbelievable, the market is going, it can turn anytime. You would see, for those that are now joined when market is down, you will see that when market picks up again, that is when people want to run and start jumping in. This period, when you look so discouraging, you look so fearful, people are scared to buy. But once it moves significantly, then people want to jump in. When they see that MTN is now 500, that's when they'll wake up, say, guy, I'm seeing that this stock is 500, though, I need to go and buy. Now it looks like it's going down. Some people are discouraged, but this is the time to begin to acquire it gradually over time, whether monthly, periodically, based on your ability. Whether it's 1,000 naira you had it, the day you have 1,000, add it to that share, you average it down rather than waiting. So you need to note that. Also, those companies sometimes come to raise money in the market. Like a farmer will also want to raise money to buy goods. And you see, like the regular market, there's what we call loyal customers. You want to get discounts or bonuses. And in this stock market, what you get for being a part of the owner, you know, sometimes I always look at Dangote Cement. When he pays dividend, I say he's doing us a favor in quotes, because he owns close to 90% of the shares. And he pays out, if the company makes 200 billion, most times he pays out the 200 billion as dividend. He's been doing that in the last 3-4 years consistently. As at half year, their earnings per share, which is the profit divided by the total shares that they have, you buy per unit, is already about 30 naira per share. If they continue, this is an assumption, at the same pace, it means that their EPS, which is their earnings per share, will be 60 naira. Last year, they paid 30 naira, right? And we were so excited, even in the community, when they paid the money. We're so excited. So this year now, if they make 60 naira, I'm even projecting, if they want to be conservative, it will not pay below between 40 and 50 naira. Let's even say he wants to keep 10 naira back in the firm. So imagine that you are getting 50 naira dividend on a stock that is less than 500. That's almost 10% yield. And Dangote Cement is a stock to buy. So those are some of the analysis that we look at. Is not, we don't make it complex. This is not doing complex calculation. Is trying to see based on their performance. So in simple terms, you buy low and sell high. That's how you make profit. So now, as we progress, coming to the Nigerian stock market, how does it work? It's also, they've just created a platform where we all come together to buy and sell. So you will see what I post on those bids and offer. They are just using technology to aggregate all the orders. You say you place your order, we all place our orders. All the orders in the market, we all come together, we place the orders. And all of us will have different views. Some people we want to sell, some people want to buy. And everybody comes together as a market. That's what the stock exchange is doing for us. So let me give us one tip, that if let's assume a stock has jumped. I always preach against or try to persuade us not to invest when a stock is already running. But if you still think you want to get that stock, like when the insurance stock was going up, the best way to do it is that you come to the market at 9:30. The normal trading starts at 10. But at 9:30, the market still accepts orders. So what most people do is that they come in early and put in their trades. You mark it up by 10%. So let's assume a stock closed at 2 naira yesterday. 10% of this will be 2.2. So I will just place a limit order at 2.2 at 9:30 or 9:35, between 9:30 and 9:50, because between 9:50 and 10, you won't be able to, those orders will not get to the market. Between 9:30 and 9:50, if you are desperate to get a stock, you come to the market early. We say early market. If you look at people, you get things cheaper. So you may have those, if you have a particular target in mind and you still want to get that share, maybe the second day before it gets to the third day, except there's no trade in that stock, you are almost likely to get, because you got in early. So if you are desperate that you want to join the moving train, I always guide against, don't join moving train, because it can be 50-50. If it goes on well, we'll smile. If it doesn't go well, you may be bitter, than you might have lost money. So 9:30, by 2:30, market will close. But from 2:20, your order may not get to the market again. So most time, plan with, if it's normal trading, 10 to 2:20 for Nigerian stocks. If you want to submit, depending on the platform you're using, some may just allow you to submit even if it will not get to the market, but it won't get executed. Secondly, coming to the US market, based on the time difference now, US market opens almost immediately. So as the Nigerian market is closing, the US market opens. For some of us that trades significantly, for some of us that that trades significantly, it means that as you are ending market at 2:30, then you are moving into another market at 2:30 up to 9 p.m. So you see, and the US market, or as what we call pre-market, even before market opens, trades happens that you can buy and sell from 9 a.m. Nigerian time. That's almost 5 hours ahead. You are buying and selling, but it's not active. It's not your share. Trade may not go. Those abroad may have opportunity to have apps that are doing that. And after market, up to 1 a.m., even when it closes at 9, you can do that. So that's really important. And the US market is more volatile than the Nigerian market. One thing that I think I forgot to mention, the Nigerian market, maximum gain is 10%. It's 10%. And maximum loss is also 10% in Nigerian market. You see that it's capped. That means you can't lose more than 10% in a day or gain more than 10% in a day. But there is no cap in the US market. What does that tell us? It means it carries higher risk. And that is why don't just go online browsing, getting this, and you're just buying a stock. Be sure. We've seen a lot of people bought stock and they come and they restructure them to almost zero. You can lose all your money. A stock can go down by 100% in the US market, and it can go up by 200% in the US market. But if you buy stocks that have strong fundamentals, they may go up and down, but you can't see them drop 20% in one day. Even Tesla, when he had issues with Donald Trump, the first major outburst, then the drop maximum was 18%. The second day, it already picked up by another 7% because people saw value that, see, their field may not naturally affect the business. So those are ways. And for those that don't like to take risk at all, just stick with what we call ETF. I used to have close to 50% of my portfolio ETF that I don't want stories. I'm trying to build wealth. I've done the analysis from most of us that are on the platform, the analysis that it's returned an average of 18% every year. You know, for those that are even investing in dollars in Nigeria, maximum they get sometimes is 8%. So if I can be getting 18 is even high for me. If I can be getting 15%, 12, 15% every year, and I'm compounding in dollars, I'm fine. That doesn't mean I will not invest in other stocks, but you see that I've tried to minimize and balance my portfolio, that I won't just wake up one day and I just see everything down. So that VOO ETF that we've always been saying, you need to have it in your portfolio. If you don't want to do 50%, fine. But if you are building wealth, not trying to speculate, not trying to trade, I've done all these things before. So I speak from experience. Yes, trading it takes a lot of time and you have to master it. But when you invest, it is very hard to almost miss it, especially with that dollar cost averaging method. It is very hard to almost miss it. So try to build a portfolio. Don't gamble and just buy stock. Most of what we try to teach, so it is not textbook, it is things that I've practiced. I've lost money several years ago in this market, but I didn't give up then, and I've learned the best way to trade this market. And when I say trade, invest in this market so that you won't lose money. Market may look, even the US market is up. It may look interesting now. But what happens if there's a major news, political war, different news happening? How will the stocks perform? So be mindful of that. Don't just buy any stock and you just read online. There are a lot of stocks in the US. I will not say limit it to just my recommendation. But if you are new, you can, if you don't have that time, you can start and bet and just try with the stocks. That's the essence of that, of the portfolio. You will see sometimes I say not within my coverage. It's not possible that I would have understanding on everything. But I try to follow the stocks that I've listed so that if you ask me anytime, I can tell you the share price, the volume, what happened. And sometimes we get some news, especially in the Nigerian markets. I may not come and state, I will just tell you buy, but I cannot state that there's a news about this thing maybe about to come out or that one may just be privileged to have. What you will just see is I'm saying just I think you should buy this stock and keep. I think you should just put money aside, like Ella Lakes. Those that bought it at almost 4 naira stayed there for more than a year. Just buy, keep. Because I had the privilege of those that went to their factory, saw what they had at that price. You know, now it's trading at 12 naira. And I'm a bit very worried because they've not made more than 70 million this year. And they are still running at a loss. That doesn't mean it doesn't have a future. But you can't go in very aggressive in that stock. What happens if the business doesn't work? Compared to Presco, Komu, their oil palm are already producing. These ones may be producing in the next 2-3 years. And depending on sincerity of the management, corporate governance is key in all these things. So that we need to also note. That's the US market. Yes, I think I've spoken about this. So we'll still get, how do you also invest? I'll come back to this as we project. So now on our strategies, investing strategies, you have to be clear when you are coming in. So most times when you say, Dr. Ayod, do you think I should sell? Most times I may just, maybe you will see that I will need to ask 1 or 2 questions because I may not know your strategy. If I just say sell, I'm not being professional. Except maybe I see that maybe depending on the stock. But it's always good to understand one strategy. If your strategy is buy and hold investing, it means you are investing for value. You are investing to just build value over time. A stock that you think will continue to go up. I will show us example of that. We use Google Finance. I want to make this training a lot holistic so that others that will also join later can also listen to the recording and also benefit from it. So we will spend more than 1 hour today for the webinar, because most times we try to spend 1 hour and we take questions for 1 hour. So please, you just pardon me. So once you are just buying to invest, it means you, with this strategy, dollar cost averaging. So you just buy, you are holding. So every month, if it's 10,000 naira you are putting there, you are just buying. If it's $10 that you are putting in the stock market, US stock market, you are also just adding it. So when the stock is up, you are buying. When it's down, you are buying. You are not bothered. Even when it's down, you may even increase it to $15 and reduce what you buy the following month if you cannot afford the $10. Yes. So buy and hold in investing strategy. Index investing is like the VOO ETF. You don't want to take much risk. You know, VOO covers the top 500 companies, most capitalized company in the US. For you to be part of those most capitalized, it means you have grown your business to a level. You have been consistent over time. You can't just appear on top 500 because you have over 8,000 stocks in the US. So those top 500 are almost stocks that or companies that have something meaningful that they are doing. So that is also very key. If it's indexed, some people may like the finance space. You have ETFs covering that. Gold ETF, I've introduced it to the community, and I know a few people have adopted it. Over the years, it's been returning an average of 10, 15%. And during war, during crisis, gold has always been doing well. You can get it on all the US stock platform. Check, I think SPDR, gold ETF. If you want to have it, so I can decide that 10% of my portfolio or 5% will be gold. That means what that means is that if my portfolio is $100, for instance, $5 out of it will be gold. If it's $1,000, $50 out of it will be gold. You can decide, or $100 will be gold. It's good to diversify. So if there's crisis and the stock market is coming down, gold may be going up. Commodities most times may be going up. So you can decide to diversify on that. Excuse me, please. So you can decide that you want to diversify. You want to diversify on that. So that is important. Index investing, dollar cost averaging, we'll look at it in details to explain more. Trading actively, if it has been proven, I've done studies around this, it's been proven that 90% of traders lose money. So when you are going into it, just know that out of every 10 people that are trying to do very active day trading, very active trading, 9 out of 10 will lose money. Only one will be successful because it requires a lot of skills, requires a lot of attention. When I used to trade options, if you are speaking to me, if I have open orders, I won't be hearing you because I'm trying to just follow what is happening because market can move and go in any direction. Yes, over time, if you master it, it gives you. So, but if you are new, please don't try this. Start with buy and hold, and you do dollar cost averaging. Then growth and value investing. You would see that we have growth stock. We call them either speculative and growth stock. It means they are just coming up. They have not withstand a lot of pressure past. Maybe they are coming from emerging, they are emerging from a new sector or new business. CWG, now we're talking about, for instance, CWG emerged. Those that bought it 2 years ago have made more than close to 1,000%. But when I looked at it, I think earlier this year, even when it was around 9 naira or less than that, looked at their business, look at their clients, they pay dividend, say, yes, this is a stock that has potential, but I cannot place 100% bet on it because I need them to be consistent over the years. As they follow, as they get consistent, as people see their third quarter result, people will be checking, they'll see whether their net margin is increasing and they see whether the business is growing. Those are the things that people want to see. See, likes of FCMB and Co, not like they can't grow or they are not big banks, but are they able to withstand pressures? So when you look at growth stocks and you want to have it, it cannot let it just be a percentage. So when I see some portfolio and I see just growth stocks in your portfolio, I would say you are taking too much risk by putting a lot of growth stocks. If anything happens, they are more volatile. Why they can give you more value? They are more volatile than stocks with fundamentals. The buy and hold, you ensure that it's fundamental stocks. Then the income investing is you think is only dividend, you are investing just for dividend purposes. So that also may tie with the buy and hold because you are investing for income. So you are buying GT Bank, you think that it will go up. Beyond thinking that it will go up, they have been paying dividend over the years. They paid close to 7 naira last year. We're hoping that at least minimum they should retain last year dividend. So you just want that cash flow. Seplat pays dividend quarterly. You can also target Seplat. They pay it quarterly. Most of the banks pay twice in a year. So if your target is income investing, it means you are targeting companies that are consistent, that are paying dividend. Dangote Cement will pay dividend. Those are like the stocks that you target based on that strategy. So you need to have your strategy. And this strategy, you can have a mixture. For me, for instance, I have short term, which is like a trading portfolio, but I don't do day trading. I do it based on information, based on what I think how market will move. I have a portfolio for that. The buy and hold, I will hardly sell. Or maybe I have a project and I need cash rather than going to borrow that you sell. But I will hardly sell. Like my kids' portfolio, close to over 10 years, it's a buy and hold strategy. I sold once or twice and I bought again, but I didn't even get to buy it at a lower price beyond what for most of them, it wasn't too much opportunity I took, but because I see that I may not have the time to be tracking it, so I just bought back with the funds and left it since then. So it's buy and hold, continue to buy. Some stocks are doing 600% in their portfolio. Some are doing close to 1000% because I just buy Fidelity at 2 naira, 3 naira, then just bought it and forgot about it. So that's like a strategy. So you need to define your strategy. If it's towards a project, it has to be a mixture of buy and hold, and you maybe have a bit of maybe growth stocks that you're putting into it. And you need to time the market. Don't have short-term plan for the market. It's a big risk. Sometimes it works well. You know, when market was going up, almost everybody, even for those that don't understand the market, will say, oh, go and buy this, go and do this, it will go up. Told people to buy, it has gone up. But you have to know that if market turns, so some people came in last month now, maybe their plan is to use that money this month. They may be forced to sell at a loss. And their experience in the market will now be bittered because it is short term. Anything could happen. So I always, for those that have been following, would also be so used to this quote, but it always gets new by the day. If you are not thinking of owning a stock for 10 years, don't even think about owning it for 10 minutes. So if you can't, and that ties to only buy something that you would be perfectly happy to hold if the market shuts down for 10 years. So markets shut down last month, or even up to early of this month, that things are going south. Portfolios are bleeding. But if you know that you have bought value, you don't have any concern. Know that you have bought value. So as a new investor, how do you build a strong foundation? Firstly, set your investment goal. You know, we've looked at investment strategy. Is it towards a project? Is it towards retirement? Is it for your kids? You're building portfolio. That will determine the strategy that you would adopt. Because if it's long term, if it's short term, then you need to be watching the market. You need to cut losses at a point. If you think it's not working out, then lose all the money because you are doing short term. Also know your risk appetite. I will say it again. Stock investing is not for everyone. If you know it will affect your health, you know, we say health is wealth. You see that GTB has dropped from 100 naira or 102, it has dropped to 92, and you're unable to sleep. or your BP is rising, just cut your losses and stay with fixed income. You will still build wealth with fixed income. So you need to understand it. Also, you need to know, are you an aggressive investor? I discussed with some people say, yes, I'm very aggressive. Then you can have more of growth stock and speculative stocks and have little fundamental stock. Yeah, you are very aggressive. It means that even if your portfolio goes down by 30%, 40%, you won't bother. You will still hope that it will bounce back. But if you're a conservative investor, stay with fundamental stock, or maybe you just do 10% growth stock. And if you have to do speculative stocks or highly speculative stocks, you put what you think you can lose, that you forget. There's a stock that I may give us this week based on some findings I've done, that I will tell people, put what you think you can, just forget it. If it works out, it's really going to deliver in the next 5 years. But if it doesn't, then you just know that the bet did not work. And I would like to share, there was something I did about 2 years ago. I tried to so I looked at 10 stocks in the US market. I did proper research, understand around the AI space, pennies in the AI space. And I just did that. Let me put $10, an average. Some are more than that, just using for example, in 10 stocks. And let me just forget it. So in my mind, I already wrote off that portfolio. So even if it turns to zero, so I'm leaving it for 5 years, I'm not bothered. But you know the interesting thing that has happened, some of those stocks have done 1,000%. And you know that the worst I can lose on one stock is the $10, but one has given $100. So overall, the portfolio is over 80% up. But it is because I understand how market work. And I was ready to take the risk that if everything comes to zero, I will just check. I won't run. I will check what I need to do better, or what did I do wrong. You need to also understand that investment horizon, no short time. When market was up, people were were borrowing to invest in the market. So imagine what would have happened to them. You are paying interest and you are losing money. Don't borrow. It's not a fixed income or fixed return market. You can't borrow. You have 30% you are borrowing, and you are trying to see whether you will make more than the 30% in the market. That is gambling, and you can lose your money. We'll discuss this further. And diversify across sector. Don't just have banking stocks in your portfolio. Don't just have telecoms stocks in your portfolio. They are really very important. You need to diversify. So now looking at the analogy of dollar cost averaging. So I try to look at what's the best simple way, because you always see me, I write DCA, 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 assuming that we all understand how it works. So what you would want to imagine that you buy 1 bag of rice every month, no matter the price. So you buy in January at 10 naira. You know, we're using monthly. So this rice can be a stock, whether US stock or Nigerian stock. In February, you bought at 8 naira. In March, you bought at 12 naira. So you would see that you are not trying to gauge the market. By the time you had 10 plus 8 plus 12, you discover that your average cost comes to 10 naira. So instead of you to start timing the market, you buy when prices are low, you buy more shares. When prices are high, you buy fewer shares, because of the value. So if you have committed 10,000 monthly, for instance, last month we would have bought it at a lower price compared to the price we bought in July. That's a plus. This month we should not be bothered. If it comes lower, that means it's also positive for us. We're buying because we know that ultimately it will still go up. You know, one of the benefits of the dollar cost averaging is that it removes emotions from investing. Oh, I think it will still go up. Should I wait a bit? I think it will go down. Sometimes it works out, but you cannot be 100% sure all the time. So it's important that it removes that. End of the month, when I want to buy from, I keep buy from my long-term portfolio, is the level I find it at the end of the month. I just buy it. Except when there are very obvious period that I see market is seriously down. I may look for money before end of that month to buy within that period. And by end of the month, I'm not buying because I already committed what I used to commit. So important. Make investing consistent and disciplined. If it's one off, you get 10,000 naira, you just want to put it and forget it. Fine, you can put it and forget it, but that's not building investment. It's those that put 1,000 naira over time will do better than you than just putting 10,000 naira and forget about it. Consistency is key. It helps you to build wealth over time. And for long-term investors, it's perfect. It helps your portfolio. So also now trying to explain, let me explain this concept. You know, I pick from a lot of questions that we've always been getting, and this also the right time to also explain it. Limit order, market order. You know, when market is down, it's interesting. You can use limit order. So you set if you are buying, this is the minimum amount that, the maximum amount you want to pay for it. I don't want to buy GT Bank more than 90. You just put it, you put a GT Bank, you say 90, and you just go on. You say you are putting it for limits. Then sometimes you say, okay, for 5 days. So what happens is that every day when market opens and market is trading, it will submit your order into the market. You know, we have the bid offer. So bid offer, it will submit. If you are trying to buy, it will submit your order into the market. What happens is that is the best price that comes up. So if you have if a customer here has put 95, another customer comes and put 96, another customer comes and put 97, they'll put the best person up. Because the person trying to sell, you see this person that is on offer, trying to sell. This person is trying to sell. Sorry. Oh, okay. So I'm using a different chart. Sorry, I thought I was speaking on this. So let me stick with this limit order first. I will explain it on the next slide. I thought I was already on that slide. Yeah, so this limit order and market order, you just put your limit. This is the price you want the maximum amount you are willing to pay for it. Market order, you just want to buy it now. So sometimes if I check the bid offer and I know I don't have time and I think market will go up, like this week, try to get ICO. When I saw it on offer, I bought at 308 to average down, right? With the mindset that the second day it will get to 280, then I'll buy more. Because I know that before the news, it was around 270. So it may not go below that price, but now it's moved to 340, right? I just bought at market because if I put it at 307, I may not have the time to come and cancel and change it to 308 if it doesn't go. I may be carried away with other meetings. So I use market order. Once I check, I just buy at what is available and move on. But limit order is good. So it doesn't just go to the market. And once you are not in a hurry, you just put it. And if the system works well, no technical glitch, you can cancel and adjust your order. But it's good to note, let's assume you want to buy 5 units. If you have been supplied 1 unit out of these 5 units, you won't be able to cancel your order again. the system will not allow you to because it has been partially filled. We call it partially filled. The system will not allow you. You can only cancel if nothing has been filled in your portfolio. So it's good that we note that it's when it's partially filled. So if you have the time and you are not in a hurry, limit order works best. It won't just buy it at any price for you. Look at the market, or you think you want to get Zenith at 60 and you may not know when it will get there. So most even traders, you see them, they can come to the market and queue for GTB at 88 and just leave it there for 5 days. Suddenly they will just receive alerts that it's been done. So it may come to 88 within 5 minutes and move back. 88 within 5 minutes and move back to 92. You know, you are not there, but it would have supplied you within that period. It has a lot of advantage too over market order. I hope maybe that would have also clear, but if it's still not clear, during question and answer, you can ask. So now what I was trying to explain is the bid and offer. So trying to link it, how the market works. So someone says he's bidding because it says buying. Bidding is you are buying, offer is you are selling. So you are saying that you want to buy at 90. So customer A says wants to buy at 90. Customer B wants to sell at 100. You know, it's a market. Everybody is rational, like we say in economics. It's rational. I want to sell at 100. If it's not 100, not selling. So all of them will be, thousands of people are thinking different ways. So over time, you see someone say, okay, maybe let me come down to 97. It's like people today, they no one agree. This one will say, okay, I think I need this stock. Let me come back. Let me go up to 95. You are changing, or someone else sees that 90 and he sees this person at 97 will say, okay, let me move at 95. Maybe this madam will change her mind and bring it down and sell to her at 95. Or this Oga too will say, okay, let me move up and just buy and move on and leave the market. You know, if you recall those days that you go to the market, let's go with my mom to the market and we'll price at different spots. Eventually, we may come back to that first spot that we started the price. All those days used to be so annoying that you know that this day like this, you would walk around the market. So that is how it also works. It's a market. So everybody has the psychology. And sometimes what we see is, you know, when I post that bid offer, you will see that you check the number of units that people that are on bid, number of units of people that are on offer. And the price they want to sell will also determine if all of them that want to sell today say, I don't care, I'm not selling below 100. Those that want to buy to say, I don't care, I'm not buying above 90. No transaction will happen that day. And that is how market works. If nobody tries to shift ground, no transaction will happen. It will be a zero transaction and everybody comes back the next day. However, people most time will shift because you have thousands of people putting in orders and people want to buy. Secondly, I also want us to note sometimes trade may happen like this trade now, maybe it now happens at 96. There's a certain number of units that can change the price. So if GTB opened at 100, for instance, and the trade happens at 96 and it's less than GTB, once it's below 100, you need 100,000 units to move the shares. You move 100,000 units to move the shares. If they don't trade 100,000 units, and what traders do sometimes, they don't want price to change, they may trade 90,000 each. It will still close at 100. So you are wondering, I sold my shares at 96. or the broker sold at 96 for me and it still closed at 100. Why can't they close at 100? So it happens. Sometimes if the price is above 100 naira, you need 10,000 units of shares for the price to change one transaction. So it means that I must sell 100,000 shares at once for a price to change for below 100. So that's also good to note, because those are some of the questions that comes to our mind. So I thought I was really thinking, because I wanted to make this thing as practical as possible, not just coming to talk. That, see, if you start today, try to model that if you are putting 100,000 naira in a stock, and I use GT Bank shares, the assumptions that I've used in the model, for instance, I said dividend yield of 8%. Last year, dividend was around 8 or 9%. Sometimes it's always close to 10%. And I also assume that the share price will not grow more than 10%. You will see that it's very conservative. Even this year, GTB has done 50%. But I'm saying in 10 years, let's assume it's even growing at 10%, which what I try to do there is that let's assume it's gained 50% this year. Even if it goes down by 20% next year, doesn't matter. It means on the net it's 30%. The following year, if it goes up by 20%, it means that it's now 50%. If you are doing 10,000 naira monthly, right? The value in 10 years, the value of your portfolio would be 3.3 million. That is like 3 times of what I'm getting, and your dividend would have also increased. And this is what I've also just assumed. The share price in that 10 years will be around 231. It's not impossible as long as they continue to make money, recapitalize, grow bigger. It's not impossible, right? So what I'm trying to push us to do is just set something aside, whether it's 5,000, whether it's 1,000. Just start. Once you start and you master the science around the markets and you are consistent about it, you just keep building wealth and you're getting your dividend, you are reinvesting it. That will really help to grow faster. I also try to use Apple shares. I even had to check the calculation well again, that I hope this thing is correct. And this, I assume this one is 20 years. If you are putting $10 every month and the share is growing by approximately, I assume the 10%. I think these are 10% annually. And you know that you are doing is a fractional share. So at the end of, well, because you are buying $10 every month, you will not have more than 6.77 units of Apple. But the value of that Apple share by then would have entered close to $1,000. So which would be able to give you about $10,000, because you are also reinvesting. You can check all these things online. But what I want to pass to us, the ideology about this, is that if you are consistent about it, now I want for those that have not started, if you have started, congratulations. If you have really challenged and you are getting discouraged, I would about your portfolio, you can also speak out. Let's see what we need to do. Because if you have been following what we have been putting in the market, your portfolio will not be significantly down. Even GTB that went down from 102 to 92. Yes, down, but it's not like a panic situation. Zenith from like maybe 72 is like 66. But they are beginning to stabilize. We saw the market on Thursday beginning to stabilize. So if you buy the right stock, there's really no cause for alarm. If you were, and one thing I want us to note, if you are so confident with yourself and you bought a GTB at 102, you should have more confidence to buy it at 92 if you have money to add more. Because what happens that we see in the market is that you get more discouraged at this level that is at 92. Oh, let me just leave it. I'm not doing again. But you were confident. You entered. What made you buy at 102? What made you buy Zenith at 76 or 72? Those are the things you need to. What made you buy Zenith at 450? Now is at 400. You're supposed to buy more or you wait. Is the stock that in next 1 year it will still cross 500 based on how they are making money. So I'm not just saying it based on speculation, but based on how they are making money. So speaking about this strategy of long-term, review your portfolio, you balance it. When you see one stock maybe has grown, then when Ella Lakes, for instance, I told people take out your profits. Maybe you now put it in strong stocks because maybe by the time it's gained over 100%, maybe it's now forming 20, 30% of your total portfolio. It got to almost 19. I think it's currently around 12. So imagine if you have not done anything, it's back to 12. But for me, I would say a comfortable level will be below 10. It's looking strong, almost getting to 14. But at this level, it's not a stock that I'm really aggressive on again for now. Yeah, so avoiding emotional investing. Don't panic during market dip. Understand where you're buying. Stick to your investment plan. So whether you are buy and hold is what you are doing. Use market dip to buy quality stock. I will show us. We're almost wrapping up this so that I can show us this. I will try to wrap up before 8:30 so that we can take questions for the next 30 minutes. Yes. Then reinvest your dividend. Please, that is very important. How do you keep up? Learn professionals, the community. The announcement page is where we post things. Try to always check that. So when you scroll through the announcement page, what you will find are just my posts. Yes, some people can reply with the comments, but because of the different conversations going on the main group, which we encourage, because those conversations and questions that you ask sometimes helps to shape what I'm trying to write, to explain around you. So try to come up. If you may not disclose or the total amount if you are trying to be you may not disclose the total amount you have in your store, but I have this stock, I'm not confident it's going down. What do you think? Or I have this particular concern. You put it there. Others can also help, and I would also appreciate all those that have always been supporting and helping, because I'm not just building it around me. I want, as all this lecture is, that as we educate everyone, you also be able to teach others, you'll be able to let others know how the market works. These are the best approach. I think I've spoken about this. Also spoken about portfolio allocation. So you determine your risk. This is like for a conservative investor. Conservative, if this is just moderate investor. And for this one is like aggressive, for aggressive investors. So you need to also note that. So now that I think we have understood the basics, set your goal. If you have not been doing from this month, start, whether it's 5,000, whether it's 10,000, whether it's 50,000 you want to be putting, or it's quarterly you want to be putting 100,000, just set a goal. Let it be clear, buying for long-term retirement or towards a project. Then open your account. There's no perfect stock account. Yeah, some may be better than the other, but if you don't want to have, if you don't mind, you can have two accounts as backup. You can always consolidate them later. It's like having two bank accounts. So, or you just stick with one, open your account, set it up. If you have issues, and just ensure once you set it up, your account has been opened, it's fine. You're able to just cross that. Then try and start small. the DCA, I believe we now understand what DCA, how it works, and buy strong stocks and stay informed. Staying informed, and I will plead with, if you are just learning, coming to the, I just don't want to say give us fish with just all those stock recommendations, but I want to teach us how to fish. That's why I take my time to write those posts. It's because of the passion that I take my time. Sometimes I'm in meetings, but once I'm not like the one championing it, I'm putting something together for us. That it's easier for me to speak to 3,000, because the vision is that as we grow 3 years, 5 years, if it's 50,000 people, God helps me to be able to impact, and they are doing well. That's enough achievement, right? That you people are doing well. They can see that they are investing. Yes, today is about stocks, but across different asset classes, they are building portfolio and can look back and you are living a financial free life, that you can afford everything that you think you want to. Yeah, so that's Vanguard, the 500. I'll go to the I'll go to the Google stuff now, so that we just see some of these stocks that if you see how they work. This one is showing the different resources that you can go and check prices, Yahoo Finance and Google Finance, investing.com, top rank. So we will be able to look that. So for the next 10 minutes, let me try and let me reshare on this to reshare. So we'll start with questions, but let me watch list. Sorry, just a minute. Let me check. So list. Yeah. So to see the market, how can you see my screen, please? I'm resharing now. Can you see my screen?
Yes,
Yes,
we
sir.
can.
Okay, thank you very much. So maybe let's start with the US stocks. This way I've just programmed based on my watch list so that it's easier for me to follow and track. You know, most times when you see that this is like what I try to post and crop. So looking at Apple, for instance, you would see that, so if you look at the last 6 months for Apple, this period, almost every day I was saying, this it stays sticky. When we say sticky, that means trading just between the 200. So you will see from April, this is a 6 month chart, 193. Yeah, this was during the deep trade, the trade war issue. But over time was trading at 200, saying we should buy, we should buy. You can see now at 239. So even if we're doing our monthly stuff, that this is March, let's say end of March, you bought at 222. You see, end of March, you bought at 222. End of April, you bought at 212. End of May, you bought at 200. End of June, you bought at 207. End of July, you bought at 209. You will still be able to make money. So you look at 5 years for Apple shares, for instance, it has returned 114%, divided by 5. It's been delivering value. So even if it's 10% is delivering every year, it still delivers long-term. It still delivers long-term. So you will check the one that a lot of people that most times most people are looking at, what's the next Nvidia. You see that even as at 2021 post-COVID, it was still at $13, and see how it has grown over time. See how it has grown over time. So there are a lot of opportunities in the US. market. So what we try to do, so you even see NVIDIA, look at 6 months. It came to 90, this 87. And over time it stayed at 130, 130. It didn't move. Even people were very discouraged at this level, came back and see what it's done. If you look at the last 1 year, this is how market can be, so that you also see the experience. You see, if you were discouraged and you walked out at this level of 96, you will not benefit. I know people that were discouraged and maybe by the time you recovered a bit, they just ran out like, you have just released me, let me escape. And we can see what he's doing. That doesn't mean maybe it may come down a bit, but with dollar cost averaging, buying but there's a way that you would also be able to benefit. So you will see that a lot of those stocks, you see, this is Tesla. Tesla's not done well over the past period, but it's stable. And that's why some people are saying this is also the time that in the last 5 years, 182% compared to, which is also not bad, right? And we're talking in dollars. For those that are even in diaspora, because from what we see, people from Canada, from UAE, in dollars, if you are earning 20%, because most of the investment in those region it's not more than 5% that you get, or maybe high yield 7%. So you see that there's opportunity. So, but you need to have that long-term perspective. This broadband have just been sticky. That yes, it's always been on our list, but it popped at the end of the day because it's one of the top stock. Crowd, right? These are the Google, Robinhood. Okay, we added it maybe when it was around 70. Uber is one stock that now is looking like nothing is happening. But we know that with the robo taxi that will happen and stuff, they may also pop over time. So you see that it's just been darling that. So, but what will happen is when people now see that it's around 100, 120, people will rush to want to buy it at that point. These are always times that you take opportunities. For our growth stock, all these things that were posted on the group, we try to adjust it. Look at it. You see Sean was almost scoring, he pulled back and it's up. These are growth stocks that are volatile, but they can deliver over time. This trade decks, yes, I've done a bit of research on it. It went down, it dipped significantly, but there's still potential that it will also rebound. Quantum computing. So you put money that you can forget there, but that's like the next out of those the next AI sector, or the next big thing, quantum computing. So you can even just buy the index. There's quantum, the ETF rather, quantum ETF that you just buy. I think I have just small quantum ETF. I have small that I just try to, the ETF, I just try to just buy it. I don't want to take too much risk. So I will check for the name. If the ETF means that it will aggregate all the different quantum companies and it helps to narrow. So this area you can be able to see share price. You see why do you want to buy it now? Some of them, if you want to do your own small due diligence, you can read the news. You can see their earnings. You see whether it's growing on a quarterly basis or it's up and down. So you can always look at it, and also use like this is the investing pro for investing.com. See GT Bank for years, almost low, and suddenly it's oh sorry, this is MTN. Sorry, I said GT Bank. So you see MTN. And if you have followed MTN, let me even say in the last 1 year, we consolidate, it goes up, You see it stays at a level for a while and it pops, stays at a level, it pops. That's before we all saw this. This level was when we're saying people should buy late last year in January because we're very confident that it will move. But my target was even 300, to be sincere, not this current 400. So, and it still has potential, but the lower it comes back, the more attractive it becomes. So that's what happens to good stocks. It becomes more attractive. So you can you look at that when you are investing. So I think I will stop here. Say thanks for listening, and I would like to take questions now. Thank you. Let me check the question. Yes, so um let me start. Let me first check the Q&A space. So that before I take live questions, in just a minute. So I think I'll just stop the recording so that it's not too long. This like 2 hours. So for those that want to learn, they can listen to the recording. Then for the questions and answers, can yeah. So just okay. Okay. The first one: how do we